I'm Jessica Minton for IB Times TV reporting from the New York Stock Exchange, where stocks have been in low volume this week as investors await a key speech from Federal Reserve Chairman Bernanke on Friday. Mark Otto from Knight Capital and Stephen Guilfoyle from Meridian Equity Partners will be speaking with us about the latest data released this week and the probability of Bernanke announcing another round of quantitative easing. The Commerce Department said on Thursday that consumer spending increased in July, rising by the most in 5 months. U.S. home prices rose for the 5th consecutive month, while July pending home sales touched a 2-year high. GDP grew 1.7% in the second quarter, a rate that was expected, though revised up from last month's 1.5% estimate. Other data on Thursday showed the number of Americans filing new claims for jobless benefits held steady last week, indicating a lack of improvement in the labor market and keeping additional monetary stimulus from the Federal Reserve on the table. Consumer spending posted its biggest rise in 5 months. Will this data, along with the positive housing data released this week, discourage the Fed from announcing more monetary stimulus?
Well, I think it certainly slows down the urgency, especially in the case of the housing sector. We've seen housing data after housing data point that's come in either at, near, or just above consensus. So housing has certainly found a stronghold, a foothold, I should say, and the rate of decline has stopped. We saw FHFA housing price increases as well as Case-Shiller housing price increases in the last, I'd say, 9 days. So given that the price of housing is increasing, which is one of the things the Fed was concerned about, I think it does slow down the process. As for consumer spending, I'm not sure if that's good or something to be concerned about, because income had been gaining on spending. Now it's swinging the other way a little bit. I'm not sure if the American family is spending out of necessity or because they want to buy consumer goods and services. So I'd hold off judging that particular data point.
In the Fed's Beige Book released recently, they said that growth was gradual, but previously they said that it was moderate to modest. Do you think that this should be looked into more, or does that mean that they're more likely to have another round of economic stimulus?
I believe 6 of the districts still announced modest and 6 were gradual. I think gradual is certainly slower than modest, in my opinion. I think it's certainly a sign that there is concern here, yet there was no sign of deteriorating economic conditions within the Beige Book. Although there's not really growth, there isn't the kind of growth we need or the kind of expansion we need. Without deterioration, will they go ahead with quantitative easing? Will Bernanke announce something tomorrow? I don't think so. I think Mr. Bernanke will be rather cautious in his statements. I think the jobs number next Friday will factor into the decision the FOMC makes on the 13th of September.
German business sentiment dropped for a 4th month in August to reach its lowest level since March 2010, signaling domestic firms are increasingly vulnerable to the effects of the Eurozone crisis and that Germany may no longer be a safeguard. The Munich-based Ifo think tank said on Monday its business climate index, based on a monthly survey of some 7,000 firms, fell to 102.3 in August from a downwardly revised 103.2 in July. 3 years into the debt crisis, growth in Europe's largest economy slowed in the second quarter of 2012 to 0.3%, and a string of increasingly gloomy data has raised the possibility of contraction in the second half of the year. German business sentiment fell for a 4th month in August. Does the decline in the Ifo index reflect companies' fears that key European export markets are faltering and that emerging economies can't pick up the slack?
It's definitely a concern. I mean, that data covers projections for current terms and going out to 6-month projections. So it does seem as though the longer that we're looking out, the more bearish that the sentiment is. Obviously, the emerging market economies that have actually participated to the German economy and helping it to slip away from falling into recession have been China and Russia in the first half of the year. Now, if that should continue is really dependent upon if China's fine-tuning process that they're in the middle of is going to take grip and actually start to roll forward, because of macroeconomic data out of China recently has been pretty dismal.
After the German sentiment data from this week and then the PMI index from last week, do you think that Germany is losing its resilience to the Eurozone debt crisis?
Absolutely. I think that there seems to be some signs of weakness in Germany. There are definitely some concerns. However, near term, we're going to have, the Jackson Hole Summit is right on the horizon, followed by the ECB's plan on what they're going to do as far as bond purchasing. So I think that the results of that or any other ideas that the EU may actually come up with, something like the long-term refinancing operation, may be an alternative. Can contribute to whether or not Germany is actually going to continue to decline going forward.
Ben Bernanke will be addressing central bankers in Jackson Hole on Friday, and investors will be awaiting to see if there's any key signals that the Fed will take action at its next meeting on September 12th and 13th. I'm Jessica Minton for IB Times TV reporting from the New York Stock Exchange.